cyclical bear market that we've been in. Now you talk about the structural bull market, but there's little cyclical markets within that
Absolutely.
structural. So where do you think we are with this cyclical bear that we've been in?
Yeah, so we really believe that in the S&P, for instance, October was the cyclical low, and I'll see if I can just throw my chart on the screen here. But if you look at it over time, in a secular bull market, okay, like 81 through 2000, or like 1951 through 66, or like 2013 to the present, recessions were discounted when the market went down 22 to 28% over 12 to 18 months. That's been a typical recession in a structural bull market, like 1990-91, for instance. Okay, so if that's the case, this bear market that we went through, this is the bull market 1981 through 2000. This is the 1990-91 bear market. It went on for 18 months, and it declined basically right to the 200-week moving average. And ultimately, once you were out, you rallied until 1994. That was a pretty tough recession. There was a lot of savings and loans, got into difficulty during that period, and certainly real estate dropped by 30-40%. If we look at the current cyclical bear market, we basically came right down, kissed the 200-week. We rallied, and every pullback since has pulled back to a higher low. Now, if we look at that on a just a daily chart, we had this whole bottoming process. And when we got to the low in October, the percent of stocks in uptrends actually was better than where it was when we made the low in June. So I always look for a disconnect when you're going through a bottoming process, where the secondary low actually has better breadth than the original low. If we went back and looked at the bear market in between 2000 and 2003, the market made an important low in December of 2002, made a final low in March of 2003, but breadth was better when it made the low in March of 2003. In the financial crisis, breadth hit its worst point in December of 2008, when the market made its much lower low in March of 2009. Actually, breadth was better at that point than it was in December. Now, the financials took us all the way to the low in the index, but there was a discord in the numbers. So really, since October, we've seen a series of higher lows from a breadth perspective. It was a 27.5% pullback top to bottom. We're now just about 20 months. We're about 5% from the old highs. Irrespective of whether we bounce around a bit in September, October, I think this thing's over. And we'll probably have 3 years in front of us where markets surprise people to the upside. And maybe even the themes that are leading will surprise people to the upside, because not just tech, and tech looks great, but things like industrials and materials and energy, I think, look quite interesting.
Excellent observations. And I guess it's what we love to hear, but it is what it is. And I love how you speak the truth and what you see. And it's just simple. And I love that you simplify it. And that's the key. You're very objective in your approach. You see right in front of you higher lows and higher highs, and that's key. And then on that chart, it looked like an inverted head and shoulders to me, as well as a cup and handle and the saucer there and everything, right? And it just looked like a nice cup to drink from, nice cut cafe, but it looked pretty clear cut. And I love how you mentioned that second on the right side, it was higher. Looked like it was even higher, ready to go up. So those are all very favorable. And then you talk about the next few years, seems like it's going to be a rotation into these higher cash generators, and it's going to be different. I love you look back to the 40s, not just the recent past, but you're looking back further, looking at value, looking at increasing dividends. And now 3 years from now, you think we could encounter a secular bear market again, as the market cycles can show?
Yeah, I think that we're probably in a secular bull market for stocks for, another 7-8 years. I
Oh,
think
yeah,
that we'll
7 8
have,
years.
we'll have more cyclical bear markets for sure. But I think the truth is that we have, structural bull market tends to go on 15, 18, 19 years. And we're really only about 10 years in. If you look at the percent gain since the lows in 2013, again, it's really not comparable to other structural bull markets yet. So I think that this is kind of a midway point, a lot like 1990, 91 was.